What's up, everyone? It's Scotty with Money Investing. So the Nasdaq here underperforming the Dow and the S&P 500, selling off a little bit over 1%. The S&P 500 was also down, trading just under 4,100, down about 25 basis points, and the Dow Jones was higher and green on the day, up a little bit over 24 basis points on the day. So S&P and Dow were more or less flat. The Nasdaq was the one that was really selling off, the technology sector pulling back on the day. But guess which stocks were not selling off? And in fact, they were outperforming. They were actually up at least 2% on the day, if not more. Well, that was our trade ideas. So hope you guys are doing well and are having a great time. So if you guys enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. If you're interested in joining us, there are only 3 spots left if you want to take advantage of that discount and get access to all the trade ideas as well. These right here were the trade ideas from last month, and they have just been crushing it recently. On the day, Johnson & Johnson up a little bit over 4.4%, getting up to $165 and approaching our target of $168. Huge outperformance from Johnson & Johnson on the day. This right here was TMF, up another 2.7% as we got the yields rolling over. So the 10-year yields did drop down to below 3.3%. And as a result, long duration bond ETFs continued to push higher. So very strong outperformance from bonds over equities on the day today. This right here is Vertex. Vertex with another outperformance on the day, up over 2.3%, getting up to $321, almost $322 per share, and getting up to our target of $323. This right here is Eli Lilly. Although the trade idea is more or less over here because our original target was 353, which was already achieved yesterday, it's starting to break to the upside even more, and 373 is going to be that level to watch next. I did close out my covered calls on both AMD and Tesla. So AMD, I was up a little bit over 74%. Tesla, I was up just over 65%. Both of them are closed out because of the fact that these stocks were dropping pretty aggressively on the day. So again, if you want to access all these trade ideas, again, huge outperformance from these stocks. I was kind of excited to see that today. And of course, get access to all the options ideas and all the other buy and sell alerts. Link's going to be down below. There are 3 spots left for the Investor Early Bird if you want to take advantage of it. And I also want to mention a quick reminder that the Easter sale is here up until April 9th. We are giving up to 60% off on the bundle, which is fundamental and technical analysis course combined, with over 16 to 20 hours of content and over 80 plus lectures available for you to access. Literally everything from an educational standpoint is going to be covered, fundamental and technical analysis, and the coupon code is going to be Easter. So this right here is the mortgage application. So week over week, we did decline after 2 or 3 consistent weeks of upside here because interest rates were coming down. We did see the week over week decline of about 4.1%. So we're back to our normal levels here. Mortgage applications have been declining for quite some time because of the higher cost of borrowing and less of an interest to buy a new home. This right here is ADP employment. Now, this was a very, very interesting report. And the reason is because we missed by a mile 145,000 jobs added in the month of March versus consensus of 200,000. And the prior number was 242,000. So this was a huge reduction in the number of jobs added. Again, we're going to find out the unemployment situation on Friday. That's when the actual employment report comes out. The non-farm payrolls on Friday. But we're also going to get the jobless claims tomorrow, and the Fed's balance sheet also comes out tomorrow. And I think a couple members are also talking, FOMC members are talking tomorrow. But today we did get the ADP numbers. We did get the mortgage applications, and both of them came in far below than what the expectations really were. So this was the state of the market. Tesla here down, Amazon selling off, AMD was down, Nvidia, Microsoft, Apple. So they were the ones that were really selling off. And one of the things that I've tried to convey everybody in my previous videos as much as I could without getting a lot of negative comments was that the markets are very much in a concentration risk right now, right? So we talked about how the markets pushing up was solely based on just a handful of names, more specifically big tech names. And as they start to run out of steam, which it looks like they are. I mean, Apple, Nvidia, AMD, they are selling off now. Amazon's pulling back, Meta's pulling back, Tesla's pulling back. It's normal for the markets to also come down because if you've got only a handful of stocks kind of driving this move to the upside, it's only a matter of time before they lose steam, and as a result, the market starts to lose steam. That's why you're seeing a bit of a rotation out of tech over to more about some healthcare, utility stocks, and defensive. This is a very, very recessionary playbook. This is a playbook which is used in times of economic distress or in times of a potential recession on the horizon. So the fact that utilities did so well today, we had energy push higher, consumer defensives push higher, Walmart, Coca-Cola, Pepsi, Procter & Gamble. Again, these are stocks that I did a video on very recently, right? Talking about the big 10 consumer stocks, consumer defensive and staple stocks. They're the ones that are doing higher. And of course, we had trade ideas on Johnson & Johnson, Eli Lilly, Vertex, all these healthcare companies that have been pushing higher. You are seeing a bit of an outperformance from these sectors relative to tech because that's where the opportunity was. That's where we had to look for last month because tech continued to push higher and there was a lot of risk on the downside, right? It's plain and simple. My job here, as I've already mentioned, my goal is to provide you the next opportunity, right? Provide you where is the opportunity? Where is the money going to go? Not where the money is going or where the money already is, but where is the liquidity going to go? That's my job to figure out. And it takes a lot of critical thinking in order to understand. It's a collaborative effort. I'm not taking all the credit because we've got an amazing community of people that put together some amazing research every single day. And I read all the comments in Discord. I read all the messages just because I don't respond as much because I've got other things to also do. But I do read every single thing that people are talking about because that's what makes it a collaborative effort, right? Gives me a lot of insight, gives me a lot of things to think about in terms of where the liquidity is going. So right now we do have more of a recessionary / defensive playbook in play. Healthcare, utilities, energy, and consumer defenses are the ones that are driving a lot of the Dow Jones stocks higher, but tech is certainly struggling at the moment as we also come up to that critical resistance on the S&P and the NASDAQ. Same thing with the markets overall. We're seeing technology, again, consumer cyclicals, services come down with healthcare, utilities, energy, and consumer defensives doing really well. So it was kind of like a flat market on a more aggregate basis. In the last 1 week, we do still have more sectors green with only industrials selling off. And now in the last 1 month, we've got more and more sectors now turning negative, including financials, industrials, and materials and real estate. So orange juice for the win, up over 3.4%. Coffee prices, sugar, cotton volatility, lumber prices, oats, everything pushing higher, with natural gas and lean hogs also selling off, with Bitcoin back over 28,000 right now and Ethereum just a little bit under $1,900. So the state of the market, again, we're very much in a limbo where there is a lot of uncertainty. We're waiting on a lot of economic data, more specifically on the inflation numbers next week, unemployment numbers this Friday, and of course the Fed meeting in May. But volatility here is getting a bit of a rejection at around 20 levels. We did get up to as much as 20.08, but then sold right back down. So when the VIX is low, it's time to go. Right now, the VIX is low, but we have to pay attention to how the volatility kind of shakes out over the next few days here. Crude oil prices are once again, or this is Brent, a little bit back over $84 a barrel. Crude is trading at over $80 a barrel still, but we are getting a bit of a rejection here. This has been a resistance for crude oil for quite some time, and right now we are getting a rejection at these prices and starting to come right back down. We'll see if we start to come down and fill this gap in the future, or if crude oil is going to stay higher at these levels. For Bitcoin, again, we're seeing a lot of consolidation sideways, and resistance is going to stay put roughly around 28,700, with a support roughly sitting at 26,000 to as low as 25K. And Ethereum also trading, pretty aggressively higher. We're getting a nice momentum back up. Support level is going to be around 1740, 1700, with the resistance sitting all the way up to $2,000 for Ethereum. Talking about the markets now, so S&P 500 first, as you'll notice that we are seeing, again, a little bit of a resistance. Now, not saying the markets are going to continue to pull back because we're at a resistance. That's what we're here to analyze, right? We're not here to get ahead of the markets and start predicting and start trading on those predictions, but instead, we need to react to what's actually happening in the market and formulate trade ideas with proper risk management and trade the markets that we are in, not the markets we think we're going to be in, right? Very, very important distinction there. And the resistance right now, we've already talked about, is going to be 4,100 to 4,200. That's that area, that's that range within which S&P has gone rejected, not once, not twice, not 3 times, but 4 times in the past. And this is the 5th retest for the S&P. If you bring out some of the moving averages, we're still trading above the 200, 300 simple moving average. That's good. That's a first sign of a potential nice shifting in trend. but right now we still got a bear sitting right there at 4,200. We'll see if the S&P can break above that level this week or next week. Nasdaq here in a very similar boat, although we are coming down to test our 300 simple moving average, but we are seeing a bit of a rejection at these prices once again. Not surprising, because this is exactly where we have previously gotten rejected as well for the Nasdaq. And again, support level is going to be staying all the way as low as 10,200. It's also in line with that October low. But before that, we've got an intermediate support at roughly around 11,400 in line with this higher low. And of course, we got that 200 simple moving average sitting right there for the Nasdaq. Talking about Apple, and again, we talked about some of the more big tech stocks and how they are starting to become a little bit on the overbought side. And the pullback is normal. And for Apple more specifically, we were kind of coming up to this lower high. And now we're starting to see a couple days of pullbacks here. Support level is going to stay put at 158. That's going to be that next resistance to watch. And of course, we've got the RSI and the MACD also rolling over a little bit from those overbought conditions. Amazon also starting to come down. As you can see, that we got up to the upper range of this consolidation pattern. RSI MACD not exactly overbought, very neutral, but we are definitely coming up to that resistance and starting to pull right back down. So resistance is going to stay put roughly around $107, $108, kind of in line with this 200 simple moving average and this red line that's the lower high. And of course, support level is going to stay put roughly in the low 80s for Amazon. Talking about NVIDIA, and NVIDIA on the day was coming down a little bit over 2%. So we are starting to see some selling pressure. However, doji candle and a green candle on a red day does suggest there were some buyers present for NVIDIA, and the momentum is still there. I mean, even though the RSI came down, the MACD just crossed below the signal line. I think the last time it did that, we did see some more momentum down. So this right here was the last time we actually saw that crossover, and NVIDIA ended up dropping a little bit over 9.6%, which again, in the grand scheme of things, is really not that much considering how much it's already pushed up. But I would, yes, certainly be cautious and careful here, trading on the long side because of the fact that the MACD is crossing below the signal line and RSI was overbought, starting to come down, and the price itself looks pretty weak at the moment. And resistance and target's going to stay put at 292. Talking about advanced micro devices, and AMD here now starting to break down pretty aggressively, now down a little bit over 3.4%. There was a bit of a lower high forming here. We also got up to our higher high in this resistance, and of course our resistance all the way up to $100 and $203. So there were a lot of things lining up for AMD to come down. RSI was overbought. We're now starting to see it trend lower with the MACD also crossing below that signal line. It's exactly one of the reasons I did sell a covered call at over $100, and as a result, we were able to profit that at over 74-75%. So next support really is going to be that 300 simple moving average at $86, down to as low as 200 SMA, sitting roughly at $78, and of course this higher low sitting right there for advanced micro devices. Talking about Tesla, and Tesla here on the day selling off another 3.6%. I will be doing a separate video on Tesla as well. But what we're really seeing is, again, Tesla just consolidating sideways in that range, getting rejected at around $207, $208. My covered calls are gone, so just no longer holding on to them at $250. So we'll be looking at maybe selling some cash secured puts next time it gets down to $175. That's what I mentioned in our Discord as well, that I will be looking at CSPs for Tesla if and when it gets down to $175. This right here is going to be that support level or that area of demand to watch for Tesla. We've got a gap to fill all the way down here in the 140s, 130s, which we'll eventually find out if and when Tesla gets down there. But support level in the 170s, resistance in the 220s, and that's pretty much the range. Talking about PayPal, and PayPal here on the day was also down 2%, so it continues to sell off, and we are seeing a lot of consolidation sideways for PayPal, lower highs being validated over here for PayPal. So again, you'll notice that we have been consistently going sideways. Fair value and support stays put roughly at $67 to as low as $70 per share for PayPal. Talking about Square, and Square here on the day was also down 1.7%. However, it is mostly trading sideways. There seems to be a lot of volatility for Square every day. It's been going back and forth with some doji candles and some longer wicks on either side. So resistance is going to stay put roughly in the $83, $84 per share. That's going to be the pretty strong resistance there. And support level is going to stay put at $58, $59 in line with this level that we have previously talked about for Block. Talking about Meta platforms, and Meta here on the day coming down 1.5%. I actually did a video on Meta, so make sure that you do check out that video. Absolute genius of how much money they've able to rake in just one single day after launching this new feature. So make sure that you do check that out if you haven't already. It's definitely going to boost the revenues and the earnings for the company over the longer term. And support level is going to stay put at $198. So this right here is going to be that level to watch, with the resistance staying put at $222 per share. And right now we're pretty much consolidating sideways in that range. RSI is a bit overbought, so that's the only concerning part from a technical standpoint. If we do end up breaking below 200, next level is going to be somewhere in the 170s to as low as 150s for Meta. Talking about Netflix, and Netflix here, slowing down a little bit, not really moving up as aggressively, and down about 1.27%. So target, I do have it all the way up to 366 to 367 levels. Those are going to be some levels to watch for Netflix. And of course, we've got that support sitting roughly around 277 for the company, with my fair value obviously a lot lower than where it is trading right now. Talking about Google, and Google here on the day was flat, not really moving much. So trading a little bit under $115, and support level is going to stay put roughly at around $100 per share, and resistance all the way up to $108 per share for Google. And right now we're mostly trading sideways. We did get a little bit of a breakout past 101, came back down to validate, retest that support, and then push right back higher. But now we're once again getting rejected at this exact level where we have previously found some support for Google. Microsoft is going to be next, and Microsoft also down close to 1% as it gets closer and closer to our resistance at 292. RSI, MACD do not look good. They absolutely do not from an upside long standpoint. You can see that when the MACD was, or RSI was a little bit on the higher side back on February 14th, Valentine's Day, and then RSI started to roll over, MACD crossed below the signal line, Microsoft did drop over 10%. So it is possible that we see a very similar price action for Microsoft as it approaches this resistance at 292. RSI starts to become, again, a little bit on the overbought side, starts to come down, and so does the MACD. So that's going to be the trade idea potentially on the short side. We'll come up with that over the weekend. I'll address all of that. But Shopify here down over 5% on the day. $45 is where we're at the moment. And this right here is going to be the gap that it needs to fill eventually, but support level is going to stay put at $41, $42 per share for Shopify. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Quite an interesting times ahead. We do have, don't forget, the unemployment numbers on Friday and the jobless claims and the Fed's balance sheet tomorrow, with a few FOMC members also speaking. And next week is the big week because we've got inflation numbers coming out. And later this month, in April, we've got lots of earnings coming out as well. The earnings season is just getting started, with Tesla being one of the first companies to report earnings on April 19th. And that's gonna tell us a little bit more about their margin situation. I'm gonna be doing a separate video on Tesla as well. But the bottom line is just be careful out there. Risk management is always going to be key. Focus on the basics, focus on the fundamentals. Don't trade, in my opinion, on the momentum, or don't trade on emotions. Kind of put that aside. Let the numbers make those decisions for you, and decide whether it makes sense or not to take that trade or to make that investment or not. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe, and again, limited spots left for the Patreon and Discord, 3 spots left for the Investor Early Bird. Link's going to be down below, and don't forget there's Easter sale going on, fundamental and technical analysis, the bundle currently 60% off, coupon code Easter. As always, happy investing. I'll see you all in the next video.